This is Jim Emter, Van Ahn Co, Alexandria, Minnesota, with your closing grain and livestock comment for July 6, 2018. So finally some news we can share and celebrate here a little bit. The end user, the processors had plenty of time to book some end user needs, so we can celebrate here a victory of market coming back here a little bit. Corn market up 8 to 8.5 on the day Friday. Bean market up 38 to 39. Chicago wheat up 8 to 11. Minneapolis wheat up 10 to 12 and a quarter. Kansas City wheat up 9 to 10 and a quarter. On the week, we had the corn market up 1.5 cents. Soybeans up 15.5. Chicago wheat 15 and a quarter. Minneapolis wheat up 24 and a quarter. Kansas City up 21.5. So it's been a while since we've been able to talk about weekly closes higher for all grain commodities, but we were able to do that here this week. Big news, tariffs go into effect or went into effect last night at 12:01. Market concern that might result in liquidation. Well, it didn't, and the lack of sell pressure there brought buyers into the industry. Some want to chalk up the problems in southern Minnesota. Others want to talk about the 9-year support levels we're up against at 334 corn and 840 soybeans, while others want to talk about the fact that China, even though they're canceling, we're still getting good export business. So a lot around the market. Some facts we kind of need to get under our belt here. We've got about 771,000 metric tons of beans to ship yet to China. That's about 28 million bushels that are yet set in limbo that we'll need to watch. Could be some cancellations show up, but if we continue to see good demand from other areas, we should see U.S. beans as a discount price in the world markets right now and result in that demand coming to the U.S. Investment money firms, we heard Goldman Sachs issue kind of some more pound on the table type atmosphere about the kind of buy interest that commodities should have at these prices that they are oversold. And I think just that investment money interest coming back in here today gives us hope and optimism, but it's only one day. We got to come in here Monday. We need confirmation, and those 32 and 50% retracement marks are going to come rather quickly. So a producer needs to be in the position and ready, because we do have some very good looking crops out there, and we still got a lot of damage on these charts we're going to need to be attentive to. So be disciplined. We're kind of looking for that 920 to 940 area as key resistance points. We're looking in the soybean market at those price counts. As for the corn market, we're really looking around that 380 area as a key resistance point off that September chart. So that's if we can even get there. The first resistance point comes in around 373. We got to pull some lines once we get confirmation of where this first recovery point comes in, and then we'll get you further details on that. In the cattle market, we had on the day on Friday, feeder cattle down 30 to 52.5, live cattle down 35 to 57.5, hog market down 62.5 to 192.5. On the week, feeder cattle up 87.5, cattle market down 62.5, and the hog market down 150. Exports were a little bit dismal here on Friday, so that's a little bit of a disappointment. Cash trade 110 to 113, and that was kind of the optimism that supported the back months here in the cattle market, up $5 to $6 on the week in cash trade. Cutouts falling a little bit this week, so a lot of tug and pull here or there, back and forth, but nonetheless, we see a healthy cattle market. We should have a cleanse here. We're up against resistance points, but we see a market that'll bend back a little bit and then I think re-accelerate to the top side here for the cattle market. The hog market, on the other hand, we're a little concerned of weights picking up with the fall back in months here. Every month we kind of go moving forward has a stair step down in price, and that could be the limiting factor for the hogs if those weights tick up there. So we need to see some exports. We need to see quick resolve for hogs with these tariffs, and then maybe a little more optimism, but for now a choppy tone nonetheless for hogs. This has been Jim Emter, Van Ahn Co, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.